This is Nightly Business Report with Tyler Matheson and Susie Gehring.
Price check, a surprise jump in consumer inflation, and the Federal Reserve is taking notice. Will policymakers hint that interest rate hikes might be coming sooner rather than later at the news conference tomorrow?
Big ideas, the three startups that are changing everything, revolutionizing business, and that one day may be Wall Street's high flyers.
And want a tip? A groundbreaking new study says 1/4 of all public company deals may involve some kind of insider trading. We have all that and more tonight on Nightly Business Report for Tuesday, June 17th.
Good evening, everyone, and welcome. Some people think the great war on inflation, begun more than 30 years ago by Fed Chief Paul Volcker, has long since been won. But every now and then, like today, comes news that calls that victory into question, at least until the next number comes out. The Consumer Price Index rose 0.4% in May, twice what economists expected, and the largest increase in more than a year, with prices for gasoline, food, clothing, and just about everything else moving higher last month. A little inflation is not necessarily a bad thing. The Yellen Fed, after all, thinks the Goldilocks number for the CPI is 2%. Today's figure, annualized, is well above that, of course. So how will the Fed process that number as it begins a two-day rate-setting meeting today? Steve Leisman examines.
Inflation in the United States, remarkable for how low it's been for so long, surprised to the upside in May. Immediate concerns turn to the impact of higher prices on consumers and on whether the Federal Reserve could be forced to raise interest rates sooner than markets expect. Inflation in May rising 0.4%, the biggest monthly jump in a year and 0.2 above Wall Street's expectations. It was the fourth straight rise in the yearly rate, and for the first time since February 2013, both the core inflation rate, which excludes food and energy, and the headline rate, which includes everything, are at or above 2%. Now, that's close to what the Fed has been aiming for, but market participants quickly began to worry. What if prices keep rising beyond the Fed's target?
They've talked that they want inflation higher, but how much higher? And is above 2% bad, or is above 2% okay for some period of time? They've been very unclear as to their goals with regard to inflation, and those goals are, then unclear to people who are trying to figure out the timing of the rate hike cycle.
Part of the concern is that price gains were broad-based. Airline fares grew an outsized 5.8% on the month. Home utility costs up nearly 1%. And prescription drug, food, and gasoline prices all surged. Economist Diane Swank at Mezero Financial writing, quote, with stagnant wages in the U.S., those price increases will act as a direct tax on consumers and curtail spending if they persist. The Fed began a two-day meeting on Tuesday, and it has generally pledged to keep interest rates low while trying to raise inflation. But Fed Chair Janet Yellen is sure to be quizzed on inflation at her press conference, and the question is whether she and the Fed have thought through what happens to interest rates and the economy if inflation rises faster and higher than everyone expects. For Nightly Business Report, I'm Steve Leisman.
American business leaders are also keeping a close watch on the health of the economy. According to a new survey of top chief executives by the Business Roundtable, more are optimistic about hiring and sales, but some say their biggest concern comes from Washington, mostly because lawmakers haven't made any progress on changing corporate tax laws or other business-friendly legislation.
We need an investment climate that has companies wanting to locate and headquarter here, not elsewhere. We need a tax structure, trade laws that are competitive. So it isn't ideology as much as effectiveness, and we aren't very effective as a government, and with a growth strategy, we're, I think, trailing miserably.
The survey also found that more than half of U.S. companies don't expect to increase capital spending this year.
Green hours across the board on Wall Street today, despite that jump in consumer prices and a sizable drop in new home construction in May. Bond yields moved higher on the inflation number, giving the financial sector a little boost, and airline stocks rose after the price of oil dipped by just a little bit. The Dow today up 27 points, the Nasdaq up 16, and the S&P popped 4, just 10 points shy of another historic high.
Another big topic of conversation on Wall Street today, insider trading. An exhaustive new study concludes 1/4 of all public company deals involve some type of insider trading. That's 1 in 4. The report, conducted by professors from New York University and McGill University, examined transactions going back to 1996. Andrew Ross Sorkin wrote about it in today's New York Times, and he joins us now from New York. So, Andrew, I guess this confirms what many of us always suspected, that insider trading is a lot more common than most people were led to believe. So I guess the question is, if it's this pervasive, why is it that regulators and the Securities and Exchange Commission just aren't more on top of this?
Well, that is the question, and you're absolutely right. We knew, or at least we thought instinctively, that there was a lot of insider trading going on. We have seen the Oliver Stone movies. However, I don't think we appreciated that it was to this degree. 25% of all publicly traded transactions, and I've covered mergers and acquisitions for more than the past decade. I don't think I've ever seen a study that started in 1996 and got to 2012, and it was remarkable. In part, by the way, they say statistically that the chance for randomness, the chance that the stock moved randomly, 3 in 1 trillion. Your odds would have been better at the lottery. So the question then becomes, as you said, why hasn't the SEC been able to pursue these cases? And I think the answer is funding. It's funding, it's manpower, it's resources. And the study does a very good job of looking at the math that the professors did and then comparing it to what the SEC did. The SEC only went after about 4%, maybe 5% of the nearly 2,000 deals that they looked at. So it does raise that question. By the way, it's one thing to see the abnormal trading. It's another thing to then actually be able to pursue it. And in a resource-constrained environment, you're seeing the SEC go after big deals, big names, big headlines as a deterrent. But it may be that you need to go farther down the chain.
Let me make sure I'm understanding what you just said, Andrew. They went after 4 or 5% of the total deals, or 4 or 5% of the 25% in which insider trading had been suspected?
My understanding is that there was litigation of some sort involving, I think, between about 4 and 5% of the total deal volume that they looked at, but that is not 25%.
No, that's 1/5 of 25%.
There's still a 20% spread, and then the question becomes, from a policy perspective, how do you approach the smaller fry, if you will? Do you take a sort of Mayor Rudy Giuliani approach, which was, he went after the squeegee men on the street and said, if we do all the small stuff, it'll bubble up. They've taken the top-down approach.
Where was the trading, the insider trading taking place? Options or the stocks themselves?
So that's the other fascinating part about this study. We often look at stock before a transaction. It's not the stocks where the real action's taking place. It's in the options. It's people making out of the money, taking out of the money options and puts ahead of the transaction where they can then leverage their bet. And frankly, the SEC isn't as focused on that than they are on stocks, and also not focused on transactions that don't get completed. So oddly enough, there are lots of deals that get announced and don't get completed. If they don't get completed, a 22% chance, 22 times less chance that the SEC will go after them.
Andrew, we really run out of time, but real quickly, is there a silver lining here? Can we expect some changes?
I think the silver lining is that the SEC is taking this much more seriously than they did during the period of the study, frankly. They've recently gotten involved with Palantir Technologies, which has helped the U.S. government go after terrorists and others and really crunch big data numbers, and they might be able to do it this way.
Really interesting topic. Thanks so much. Andrew Ross Sorkin.
Grim outlook today about oil growth targets in Iraq just as global demand picks up. The International Energy Agency said that Iraq's targets for growth in its oil industry are at risk as escalating violence and political instability threaten crude production and supplies. Iraq, the second largest oil producer in OPEC.
Well, the path of violence by Islamic rebels reached Iraq's capital city of Baghdad today, following the seizure of several key northern cities in the Sunni heartland over the past week. But as Michelle Caruso-Cabrera reports from Iraq, no region of the country is safe from the unrest or its impact.
A car bomb exploded in North Baghdad today in a market frequented by Iraqi Shiites. It could be a sign of things to come as the rebels, who are from the Sunni sect of Islam, push further south into a province just north of the capital. Baghdad is starting to look like a ghost town as residents flee. A playground along the banks of the Tigris appeared abandoned. Shops usually teeming with people buying food and provisions, especially with the holy month of Ramadan set to begin at the end of the month, stood empty. Throughout the country, Iraqis are trying to escape violence. Hospitals in Iraq's northern Kurdish region are struggling to cope with an influx of patients injured in attacks by the militants. In the Kurdistan capital of Erbil, the 35 beds of the city's only trauma hospital are not enough for the dozens of patients they need to treat. We're here on the border of Kurdistan and the rest of Iraq. Mosul, a city captured by the insurgents just last week, is only 20 miles that way. Hence why thousands of Iraqis, we estimate there are about 2,000 here, have poured over into the border into this camp established by the United Nations. As you can see, the conditions are brutal. They're living in tents. There's a couple of spots where there's communal running water. Take a look over here. They have to line up in the blistering heat so they can get mattresses, blankets, pillows, portable grills. Their biggest issue is they don't know when they're going home. Also north of Baghdad, Iraq's biggest oil refinery in Baji was shut down last night. Its foreign staff evacuated, officials telling Reuters. Baji is one of 3 oil refineries in Iraq. The price of oil hovering near highs for the year, even though Iraqi exports remain unaffected. And the CEO of BP told reporters today the company has actually increased production.
BP's assets are down in the south, near Basra, down near the Kuwait border. They're a long way from the trouble. The production's being increased in response to requests by the government. It's a long way. We're, of course, very vigilant. We have removed non-essential production staff out of there. We continue to operate and haven't missed a beat so far.
And the White House announced this afternoon that President Obama will meet with leaders of Congress to consult them about the situation in Iraq as the administration weighs what the U.S. response should be. For Nightly Business Report, Michelle Caruso Cabrera, Northern Iraq.
And still ahead, revolutionaries and visionaries, 3 up-and-coming companies that could alter the way corporate giants do business. General Motors CEO Mary Barra is slated to testify at a House hearing tomorrow about the company's internal investigation into the long-delayed recall of 2.6 million cars over a faulty ignition switch. The defect is linked to at least 13 crash-related deaths. In prepared remarks released today, Barra outlines the safety and training policy changes GM has already made and the establishment of a victims' compensation fund that will start processing claims August 1st. Her appearance comes just after the automaker announced the recall of another 3.4 million cars with a similar defect that can cause the engine to stall out if the key is jarred out of position.
In other auto news, ride-sharing businesses like Uber, Lyft, and Wings are getting bigger every day, but now they could be facing a pileup of regulation, including being banned from taking riders to and from San Francisco's airport. The California state legislature took up 2 bills today aimed at making the businesses safer, and that includes requiring that the cars are hired to drive passengers that meet all state safety standards and that they have to carry commercial insurance coverage for the entire time the drivers have the app turned on, not only when they have paying passengers on board.
Services like Uber are shaking up the traditional business models of taxi fleets and limousine companies. And today, CNBC, which produces this program, unveiled its Disruptor 50 list of the most innovative private companies that are transforming businesses and taking on long-established industry giants. Julia Borston takes a look at the biggest disruptors of all.
From sending you to space to eradicating previously incurable diseases, the Disruptor 50 are ambitious, innovative private companies taking on the public giants. Here are the winners. 2 of the top 3 are shaking up retail. In the 3rd spot, Etsy is providing a platform for independent artisans to become entrepreneurs and reach shoppers around the world. With over 40 million members buying from over 1 million active shops, which lists more than 25 million items. Founded in 2005, the company has raised nearly $100 million to build on its vision of reimagining retail, taking on everyone from department stores to eBay to Amazon. Number 2, Warby Parker designs and sells vintage-inspired eyeglasses and sunglasses at a fraction of the cost of traditional frames. General Catalyst VC Hemant Taneja backed Warby Parker and 4 other startups on the Disruptor 50 list.
A lot of these companies, if you look at them, they're very unique. There's not sort of 5 of them in their categories. They're clear market leaders. And that's really where the premium valuations come, because they're they're totally rethinking their own categories, and they have monopolistic characteristics in terms of how big they can be.
The 4-year-old upstart has raised $116 million to take on Luxottica, the world's largest eyewear company with more than 80% of the market. And it's so successful so far, it's already spawned copycats. And topping the list, Elon Musk's spacecraft and rocket maker SpaceX.
I think what we've done thus far is relatively minor, honestly. I'd characterize it as evolutionary, whereas what we hope to achieve, and perhaps can encourage the rest of the industry to do, is to achieve full reusability with rocketry. That's never been done. If we're able to achieve it, then I would say that at that point, that's really quite disruptive.
PIG has been 10.59.
The 12-year-old company has raised $250 million in venture capital funding, disrupting aerospace, defense, and transportation giants, including Boeing, Lockheed Martin, and Orbital Science Corp. As Musk and other disruptors shoot for the stars, they could be Wall Street's next high flyers. For Nightly Business Report, I'm Julia Borston in New York.
For a list of all 50 companies on the list, head to our website, nbr.com.
A Senate hearing on high-frequency trading drove 3 financial stocks higher, and that's where we begin tonight's market focus. Shares of E-Trade, Charles Schwab, and TD Ameritrade all surged as lawmakers try to determine the impact of high-speed trading on investors. The relationships those firms have with clients and businesses were called into question, and an executive from TD Ameritrade faced some real tough questions from Senator Carl Levin. Despite that, and maybe because no definitive regulation came out of the hearing, shares of E-Trade popped almost 8% to $22. Schwab rose 5.5% to $27.30. TD Ameritrade up almost 5% to $31.58. United Parcel Service is changing the way it charges you to ship. Starting this holiday shopping season, UPS will begin charging shippers according to the size of the box being used, not just how much it weighs. And that's for all ground shipments. The package delivery giant says the new pricing model will lower its fuel costs. Its rival, FedEx, made a similar change last month. UPS shares edged up a fraction to $101.61. Amazon is still mum about its rumored smartphone, but the device might already have an exclusive carrier. According to the Wall Street Journal, AT&T will be the only wireless provider to carry Amazon's new phone, which CEO Jeff Bezos is expected to unveil tomorrow. Shares of Amazon were off slightly to $325.62. AT&T rose slightly to $35.02.
Dividend news lifted shares of U.S. Bancorp today. The company increased its quarterly dividend 6.5%. The new payout of 98 cents a share will be paid to shareholders in July. The stock up slightly, 43.13 was the finish there. After the close, Adobe Systems reported better than expected quarterly profit and revenue. The maker of programs like Photoshop was helped by strong growth in subscription sales. Shares rose after hours, as you see on that graphic. During the regular session, the stock was off just a bit at $67.54.
Some encouraging news about philanthropy. Wealthy Americans are donating more money than ever to their favorite charities. Robert Frank has more on the surge in generous giving.
Americans are opening their wallets. Charitable giving in the U.S. hit record levels, topping $335 billion last year, marking the 4th straight year of increases. The gains came mainly from individuals, not corporations, thanks in part to mega gifts of $80 million or more from the wealthy. But the giving was targeted, and not all causes felt the money. Education, healthcare, and the arts also increases, while giving to soup kitchens, homelessness, international causes, and religion declined.
The groups that did the best were education and the arts, and I think one of the reasons we saw that is because the very wealthiest are giving incredibly generously, and they tend to favor those causes. And so we saw lots of the very mega gifts, those multi-million-dollar donations being made to those kinds of causes.
Many thought the numbers would be even bigger. Conventional wisdom holds that charity generally follows stocks, but the 4% gain in charity last year was well below the double-digit market gains and the gains in household wealth.
Now, the U.S. remains far and away the most charitable country in the world. The next highest is the United Kingdom, with only about $20 billion a year in charitable giving.
For Nightly Business Report, I'm Robert Frank.
Coming up, as countries compete on the world stage of soccer, we continue to look at some of the best global rivals in the business world. Tonight, Apple versus Samsung. Soccer fans are still cheering the U.S. team's opening round World Cup victory last night, while South Korea plays its first game tonight. But right now, the two countries face each other as NBR stages its own World Cup of sorts, the ultimate stock cup, comparing corporate rivals that go head-to-head against each other on the global stage. Now, last week, it was Coke versus Pepsi. Tonight, it's Apple versus Samsung.
Say the name Apple, and there's something magical about it for gadget lovers all around the world. No wonder it was recently ranked as the world's most valuable brand, jumping ahead of Coca-Cola. Since its founding on April Fool's Day in 1976, Apple has become the world's largest publicly traded company by market cap. Headquartered in Cupertino, California, Apple had sales of more than $170 billion last year. Over the years, Apple's core has morphed from personal computing to mobile, but its mission has stayed the same: innovation. Its iPods, iPhones, and iPads are not only easy to use, but stunning and sleek to look at. Thousands of miles away from Silicon Valley, Samsung has challenged Apple in phone technology and design. Over the past 2 years, it's captured the title as the world leader in mobile phone sales, thanks to its popular Galaxy big-screen phones. Samsung is older and bigger than Apple. Founded in 1938 and headquartered in Seoul, South Korea, it rang up sales of $327 billion last year. It's now building the world's largest cell phone factory in Vietnam. It's expanding into drug making and biotech. And why not? As South Korea's biggest conglomerate, it's already a major player in everything from shipbuilding and construction to finance and aerospace.
So who has the stronger game plan in this big match, Apple or Samsung? Let's find out from David Garrity. David, welcome. Who's your choice here? Apple the winner or Samsung?
Our choice, hands down, is Apple. We were looking in the September 2014 timeframe with the introduction of the iPhone 6, which is going to be a larger screen phone, a product category that Samsung up until now has dominated. And the expectation is if Apple's coming out with a larger phone, maybe 4.7 to 5 inches in terms of diagonal length, that you could see a fairly substantial upgrade coming out of not just Apple's current customers, but also bringing in names from other brands, such as Samsung.
So, David, I'm guessing that if somebody has some new money that they want to invest in one of these stocks, you'd say put it in Apple over Samsung. Tell us why and how much growth you can expect in your investment over the next year.
Well, I think bottom line, we're looking at probably about an 18 to 20% upside in Apple shares from current levels, which would say a price level of about $107 a share, including your dividend income. But we would say what's more important is that we're looking at the earnings acceleration coming from these new product introductions. We also note that ahead of that, we're looking at a situation where for Samsung, even though we do look for upside of probably about 13% over the next 12 months for Samsung, we do note that the company has been missing their expectations in terms of tablet PC sales, and they've also ramped down their smartphone production to clear out excess inventory in dealer channels.
So does this mean that the fact that you like Apple more, does this mean that you dislike Samsung? Do you think Samsung's a loser or just not as big a gainer?
We think that, both companies are growing because arguably they're, one or two, depending upon how you look at it in terms of the smartphone and tablet PC categories. But we would say that, if you look at the two companies, if you're looking at Samsung, you're looking at a company that has exposure to far more commodity-oriented markets, whether it's semiconductors or whether it's televisions. Obviously, you indicated earlier in the spot what kind of exposure that they're diversifying into. In the case of Apple, you're looking at a company which is a premium brand and very much focused upon consumer electronics. And so from that standpoint, for the investor, less risk of exposure to commodity markets.
So, David, in technology, and especially with these two particular companies, there's always a question of who's the more innovative one, who's the one that's going to, come out with that jazzy next product. When you look at the leadership of these two companies, we know Tim Cook at Apple, the CEO of Samsung, less well known, but who's got the better vision?
We think that Cook, certainly is talking about the pipeline of new products that they've got coming, and arguably we're going to be looking forward to seeing what those are. Samsung on its own has been a very prodigious creator of intellectual property, but not necessarily as well known for bringing in brand new product categories. Samsung perhaps known more as a fast follower in terms of technology innovation.
You sound very confident that there's going to be a larger screen phone coming from Apple. They have resisted that for a long time. They could have done it sooner, I suppose. What makes you so confident quickly?
One, I think that Apple certainly is responsive to understanding what consumer preferences are. So I think that, it's time to see from Apple a larger format factor phone. And from that standpoint, checks into the supply chain in the Far East, where they're actually building these products now, bear this out in terms of looking at a larger size screen. We think that there are also some other important capabilities like near-field communications, NFC, which we think will position Apple well in terms of being an innovator for payment services or payment solutions being driven by mobile wallets on this new iPhone.
David, thank you very much. Match to Apple tonight. David Garrity with GVA Research. We just heard which stock our guest prefers right now. We want to know what you think. Apple or Samsung? Which is the better buy? Vote in our Ultimate Stock Cup on our website, nbr.com.
Meanwhile, now for the results from last week's NBR's Ultimate Stock Cup poll. That's a tough one to say. When we asked you to choose between Coke and Pepsi. And the winner by a wide margin in the global soda wars is Pepsi. And which is really kind of interesting because our guest that night said
Picked Pepsi as well. Picked Pepsi. Has more businesses, possible split up there.
Right.
Liked it a little bit better globally.
What do you think our viewers are going to say about Apple, Samsung?
A bit about Apple.
Okay. Okay, we'll see you next week. That's Nightly Business Report for tonight. I'm Susie Garrow. Thanks so much for joining us.
Apple 2-to-1 in extra time. I'm Tyler Matheson. Have a great evening, everybody. We'll see you tomorrow.
I'm Susie Garrett with a Nightly Business Report news brief. Inflation is on the rise. Consumer prices rose 0.4% in May, twice what economists were expecting, and the largest increase in more than a year, with the cost of gasoline, food, and just about everything else moving higher. Despite that and a sizable dip in new home construction last month, stocks ended the day higher. The Dow rose 27 points, the Nasdaq up 16, and the S&P added 4 points, now just 10 points shy of another historic high. Apple settled a civil class action lawsuit that accused it of colluding with publishers to fix e-book prices. And charitable giving hit a new record high last year as Americans and U.S. companies and foundations donated a total of $335 billion. Be sure to tune into Nightly Business Report right here on your public television station.